Hi, Chris Haddon here. I wanted to talk to you a little bit about different ways to finance your real estate investment deals. Because there are different kinds of financing that work for different situations. And oftentimes they'll have to do with your own resources and also the type of deal, the investment strategy you're getting into. Let's start with something simple like buying rental properties and being a landlord. This is obviously a longer term strategy, and the most logical source of financing for this will be a bank loan, a mortgage loan, oftentimes. It's cheaper, it's a long-term thing. Nothing's going to change over that term, typically with most loan programs, so you're able to really lay out all your numbers for the income, the rent you plan to receive, your tax write-offs, maintenance and expenses, things like that, appreciation over time. So for that particular strategy for rental properties, I would say that typically bank financing is the most logical. If you're flipping or rehabbing, as they call it, buying, repairing, and reselling, you have a few different options, and it kind of depends on your resources. One, bank financing is going to be out. Even in the heyday of bank lending, when they were giving loans to everybody for everything, they were never really doing construction loans on investment properties. So if you're looking at a rehab deal on residential property, forget about bank financing. A very common one, and obviously something we do in our lending company, is hard money loans. People will go to a hard money lender that has plenty of capital, can close very quickly, runs a legitimate operation to acquire and do the rehab work and resell a property, a piece of residential investment property. You can also use, if you have this kind of resource, private capital or private lenders of your own. Now, mind you, a lot of people might not have access to that. Some people do. There's also legal considerations when you're talking about receiving some kind of capital for an investment from somebody. There's obviously a lot of legal stuff that goes into it, but that can be a very flexible and maybe less expensive way to go about acquiring properties. So I would say those are probably, and I would say cash too. People certainly do buy investment properties and rentals for long term, and also quick buy and resell with their own cash. But you also have to look at the opportunity cost of that capital. Obviously, your own cash doesn't cost you any interest. You don't have to pay interest to a lender on your own cash, but the amount of money you have to go around for the various aspects of your business, that's opportunity cost. Maybe you can buy one property, but you can't buy these other few because you put all your cash into it. Or maybe you need to keep your cash around to front construction costs. Maybe you need to keep your cash around to make monthly payments to service the private loans you have on properties. So cash can be cheap, but it can cost you more in opportunity costs. So oftentimes people with plenty of cash will still go to a private lender or a hard money lender and say, hey, I'll put up half of this if you can put up half. That way they can keep their money to do other stuff. So just to summarize, based on the different investment strategy, you're gonna be financing the property in a different way. If you're rentals, try to go with a bank mortgage loan. If you're rehabbing, try to go with a hard money lender or a private lender. And also take into consideration whether or not it's a good idea to use your own cash for any of those transactions. Thanks a lot.